morning and welcome to Moneycontrol live stream. You're watching the opening bell and I'm Santo. Well, in the spotlight today are IT stocks after TCS announced its third quarter earnings post market hours on Monday. Now, TCS third quarter revenue has been ahead of market expectations, but margins have largely been in line. Now, the company said it's bullish on its outlook on the US and UK markets. However, the European markets are still a little iffy at this point in time. Brokerages have been mixed in their outlook on the stock, and the key concerns are the decline in headcount quarter on quarter and also the decline in the bill to book. Now, the bill to book basically means that a bill to book over 1 basically means that the company is receiving orders faster than it's executing them, and the overall bill to book in FY22 was about 1.35. that has now come down to about 1.1 in the third quarter, and that is making some brokerages slightly anxious about the stock. Among the brokerages which are bullish on TCS are Bernstein and Morgan Stanley, while those negative on TCS are Citi, JP Morgan and Nomura. Now, the big one of the factors which could possibly limit upside in the stock, according to a section of the analysts, is that valuations are not exactly cheap at roughly about 25 times 1 year forward, and hence even if the numbers have been slightly better than what the market was expecting, the upsides are unlikely to be much. Now, remember, IT stocks have been under pressure over the last 1 year, and while some feel that the valuations have become reasonable, big upsides still do not seem likely, given that the US is most likely headed for a recession and we are seeing clear signs of slowdown in the Europe as well. And moving over to the market setup, the SGX Nifty futures seem to indicate a bearish start for Indian equities. Now, yesterday the Nifty and Sensex had staged a powerful rally, the Nifty managing to close about the 18,000 mark, but however, it's still some way off from its 20-day moving average, which is what the most technical analysts are eyeing. The level that is acting as a resistance in the short term at this point is about 18,172 on the Nifty. In global cues, US markets ended mixed, and Asian markets at this point in time are trading mixed. And according to brokers, the rally seen on Monday was largely led by short covering of position. Now, it is also helping that foreign institutional investors have eased the selling pressure, at least in the last couple of trading sessions. There has been some let up there, and that is making markets somewhat hopeful that probably this there could be some more upside in this rally. Moving over to the F&O market, there has been build up of long positions in L&T Finance Holdings and M&M. Both these stocks were among the big gainers in trade on Monday. At the same time, there are short positions being built in futures of GNFC, City Union Bank, Titan, VI and Trent. All these futures are seeing build up of short positions. And in some of the IT futures, which is those of Intellect Design, Birlasoft and Persistent Systems, those stocks rallied yesterday, and that was largely due to short covering of positions in the futures segment. And let us move over to the newsmaker segment. Tata Motors reported its wholesales yesterday post market hours. Now, global wholesales have come in at 323,000 units at 3.23 lakh units. That is up about 13% year on year. The global wholesales of commercial vehicles and the Tata Dabur range have come in at about 98,000 units. That is about down 5% year on year, while wholesales of passenger vehicles, those have risen about 23% year on year at 2.25 lakh units. The JLR wholesales numbers were also fairly good for the quarter. The wholesales were at close to 80,000 units, up 5.7% quarter on quarter. Also, the record order book of about 2.15 lakh units, particularly for new Range Rover series, should turn sentiment positive for the stock, although Tata Motors has not been having a very good time at the bourses of late. Retail sales have come in at close to about 85,000 units, that is down close to 4% quarter on quarter, but still up about 6% year on year. Tata Power is the other news in the other stock in the limelight. Its arm Tata Power Renewable has got a letter of award to set up 255 megawatt hybrid power project for a group company in Karnataka. IRB Infra yesterday said that its December total toll collection was up by 6% month on month to about 388 crore rupees, and this is also up by 32% year on year. Ashoka Buildcon has said that it has got 3 projects that are worth about a little over 750 crore from Madhya Pradesh Purva Kshetra Vidyut Vitran Company. And with that, let's take a quick check on the market. The Nifty has opened on a bearish note. Both Nifty and Sensex are under pressure in early trade. Nifty is down by about 18 points, the Sensex down by close to about 88 points. The advances to decline ratio, which is the indication of the market breadth, that is positive at this stage early in the day. 1265 stocks trading higher and close to about 431 stocks are down. Nifty mid-cap is flattish, just about 16 points higher, and Nifty Bank is under pressure in early trade. That's down by close to about 60 points. Also remember, today is the expiry of the Fin Nifty. Well, and with that, let's move on to the hot brokerage pick of this morning, and it is Sona BLW by Nomura. Nomura has a buy rating on the stock with a target price of 609 rupees. Now, the immediate trigger has been the acquisition of Novelic by Sona BLW, and according to Nomura, this adds a new growth dimension for Sona BLW. The acquisition marks Sona's entry into the sensors and software segment, according to Nomura, and Novelic's wave radar tech is best suited to solve autonomous needs, according to the brokerage, which has also said that the shortwave radar technology is less expensive and more accurate than a camera. And with that, we move on to the stock takes, the stocks which have caught our attention. Dabur India. Now, the stock has fallen by close to about 10% over the last 1 month. Now, according to Moneycontrol Pro, one of the factors that's been weighing on sentiment is largely the higher dependency on rural markets. The rural markets have not been doing all that well for a while now, and that is impacting the performance of Dabur. According to Moneycontrol Pro, the consolidated revenue growth for Q3 is likely to be in the mid single digits. This is compared to about a 8% growth in the December quarter of 2021 and a 6% growth in the September quarter of 2022. India sales are also likely to report a revenue growth in the low to mid single digits, and the international business is expected to post about a double digit revenue growth in constant currency terms. The healthcare business has been showing some signs of revival. The main thing that could probably act as a headwind for the stock is that it's currently trading at a price to earning multiple of close to about 44 times 1 year forward, and overall that's slightly on the higher side. According to Moneycontrol Pro, only those long term investors should look to accumulate the stock at declines. APL Apollo Tubes is the next stock on our watch list this morning. The stock is now quoting close to its 52-week high of 1,194 rupees. This is despite the fact that the market has been fairly volatile over the last couple of weeks. Now, according to Motilal Oswal, which is bullish on the stock and has a buy rating as well as a price target of 1,400 rupees, strong execution capability, scalability and wide distributor network along with diversified plant locations are a major moat for APL Apollo Tubes. The company is far ahead of the competition as far as the installed capacity goes. APL Apollo has a capacity of about 2.6 million tons. Motilal is bullish on the Indian structural tubes market and sees it growing by close to about 17% on a compounded rate at least till calendar year 2030. And the reason Motilal Oswal is bullish on APL Apollo Tubes is that the rapid capacity expansion, also leadership position and high industry growth should help the company clock robust growth in sales volume. In addition, high margin products from the Raipur unit and also the growing share of value added products will be the other major positive triggers for the stock, which should help in margin improvement. The brokerage expects a revenue growth of 16% compounded over the next 3 years. It expects operating profits to grow by about 24% and profit after tax to grow by about 31%. Campus Activewear is the last stock on our watch list this morning. The stock has taken a fair bit of beating. The stock is down by close to about 30% from its recent high. Now, brokerage house Haitong has initiated coverage on the stock with a buy rating and a price target of 450 rupees. Among the strong points of Campus, according to Haitong, is that the company has a 17% market share in value terms and 25% market share in volume terms in the sports and activewear segment. These are the only two segments which the company is present in at this point in time. And according to Haitong, one of the major plus points of Campus is that its average selling price has been about 50% lower than that of the branded industry. Also, the company has seen the sharpest margin improvement between FY19 and FY22 compared to its rivals. The sports and activewear has been clearly the fastest growing segment in the footwear industry. Now, sports and activewear has been growing at about 14% according to Haitong, compared to the overall growth in the footwear industry at about 9%. And what's working for the company in the days ahead? According to Haitong, the company will step up its presence in the women and kids segments, and also the company is looking to expand its presence in the southern and western markets, and also it plans to diversify its product portfolio by including open footwear and casual footwear. Well, with that, it's a wrap on this episode of Opening Bell. Thank you for watching, and we'll be back with you again at 3:30 p.m.